Welcome to another exciting episode of Max Homes Real Estate. So today we are going to split our video into two sections. In section 1, we'll cover the major headlines. Typically the one that is important this time is the federal budget for 2024 that is impacting the housing market.
Right.
And in the second section, we'll cover the market data, ground reality, mortgage rates, etc.
Okay. So straight to the policy measures that we have in federal budget. I think just before that, we have to talk about the inflation print.
Yes.
Okay.
So inflation print for the month of March was out. Basically, we went up by 1 point. So basically from
0.1, right?
0.1.
Basically from
2.8 to 2.9.
9. Okay.
Even though it went up, it was, taken as a good thing that it didn't cross north of 3.
Okay.
Because everybody was speculating that it can go up because gas price is up. So everybody welcomed that 2.9 and Bank of Canada mentioned that we are still in a good position if the inflation doesn't go for the next month north of 3, which is the month of April. We should be in a good position to cut the rate in June.
Yeah. So last week we got the federal budget release for 2024.
Yes.
I think we have some policy changes that is impacting the housing market. So Max, please help us
Sure.
walk through.
So obviously affordability and the supply is low. It's a major concern. So the government unveiled a major plan to increase the housing supply.
Okay.
They are planning by 2031, they're planning about 3.87 million homes.
Okay.
Already they had 1.87 million planned, so they're planning additional 2 million. So how are they going to build it? They are looking at underutilized land in the Canada Post and National Defense.
Okay.
That's already in the government's with government, and they're going to turn it into housing.
Okay.
That is one of the major ambitious plan.
Yeah, that's looks like a really big target for the government. Let's see how they're going to achieve it.
Yes.
It's a questionable target, I guess.
Yes.
Yeah.
With that comes, how are you going to pay for it?
Right.
Basically, increase the revenue. So for that, they have increased the capital gains tax from 50% to 66.6%.
The inclusion rate for the capital gains.
Inclusion rate for the capital gains.
Okay.
For anything over 250,000.
50,000. Okay.
Yeah.
Okay.
There are pros and cons with that. Of course, we don't want to raise money, but this discourages the investors from investing to new capital projects because the capital gains tax is high.
Right. Okay.
And also this discourages or rather encourages investors to liquidate a bunch of their rental portfolio.
Right.
Because if they hold on to it, they might have to pay a higher capital tax.
Yeah. I
But
think
yeah.
they have time until
Until only June.
Okay. Okay.
Because government is smart. They're not giving enough time. The next one is on the renter's bill of right. Basically, the government is encouraging the renters to pay rent in time, so that if they are good with paying rent in time, those good payments will be counted towards their credit history.
Oh, okay.
And when they are ready to buy a home, their discipline of paying rent in time will be counted towards their mortgage rate, plus their credit score, etc.
Okay.
I think that's a very good initiative.
That's right. That's right.
Also, another one is providing a rental protection fund. Basically, families that are struggling to make payments like for the rents, they are providing a fund. So the low-income families can tap into that fund if they cannot make rental payments.
Okay. I think this comes under the renters bill of rights is what they call, right?
Correct.
The policy, right? Okay. Let's see. Yeah, I think this is a good step forward for helping the renters.
Right.
What else we have?
Another one for the first-time home buyers, which is regarding the amortization.
Okay.
So, if as a first-time home buyer, if you are interested to buy a new build starting August 1st, you are eligible for a 30-year amortization instead of 25.
Okay.
That basically brings down your monthly payment down so that you have more disposable income. And also that will increase your mortgage availability. So that you can reach out to a higher mortgage.
Okay. But does it really make much effect in the market, because we know that the pre-construction projects are being bought down by this investors rather the first-time home buyers, right?
Yeah, but mostly. But then this helps them to tap into the pre-construction market too, because the pre-construction has been impacted by high mortgages
Yeah.
rates. So this is a thing that could encourage first-time home buyers to tap into first-time, into the new build section.
Okay. Let's see.
And and then is regarding the withdrawal of RRSP amount.
Okay.
So you can withdraw up to 60,000 as an individual from 35,000 from your RRSP, and if you are a couple, basically you can withdraw $120,000 from RRSP towards a first-time home buy.
Okay.
And previously it was like you have to start paying back the RRSP within 2 years. Now they have extended up till 5 years.
5 years. Okay.
So that will give you some breathing room to make payments only within 5 years. Yeah,
I think that's a good policy measure for first-time home buyers.
exactly.
Yeah. Anything else that we are covering here as part of?
Yeah, the government has rolled out certain modernization of the housing data and also preventing mortgage fraud.
Okay.
One recommendation was to use, to get a mortgage, you need income verification. So basically, use CRA when you file the tax for the year. You will file the taxes with CRA. So usually the mortgage companies can verify the CRA information directly to approve your mortgage.
Okay.
So that to avoid any fraudulent, representation for the mortgage application.
Okay. I think it's a good step in the right direction. Let's see.
Yeah. And the second one is about the fair and open banking. Basically, they are encouraging fintech companies to provide better and competing services to the consumers, whereby they have secured channel into our banking information.
Okay.
So once this infrastructure is in place, not just the big 5 banks, other third-party fintech companies can also compete to get our consumers' business and provide competing products.
Products, right? Okay.
Which will help the end users.
Okay. Hopefully.
Yeah.
Okay. So anything else we have?
The next one is we have about halal mortgages.
Oh, right. Yeah.
So basically, in the Muslim community, taking interest for mortgage is kind of forbidden.
Okay.
So to cater into the Muslim community, the government is planning to make halal mortgages mainstream, available in mainstream banks.
Okay.
So right now it's only very few lenders are catering into halal mortgages. So they are planning out plans to ensure that it is available in
across
all
board,
the
right?
banks, yeah.
Okay. And
so everything only is mentioned at a high level.
yeah.
Those a lot of planning and guidelines and policies has to go into that.
Yeah.
At this point, they have only made a high level.
Yeah. Even though these halal mortgages are interest free, I think there would be conventional fees. I mean,
Absolutely.
fees on that, right? To combat the interest
Yes.
cost, right?
Yes.
Yeah. Okay.
So typically, what they say is, halal mortgages at this point is sometimes it might be higher than conventional mortgages, but then they cater into the fact that the fees is collected instead of the interest, which is a win-win. Where take care of the Muslim faith as well as everybody is taken care.
Right. Okay, I think we covered.
I think that covered the major
policy measures, right?
Policy measures as part of the federal budget in 2024 that impacts the housing market.
Yeah. So if you have any comments, please put that down and help us growing and giving your positive and even negative feedbacks to improve.
Yeah.
So please watch out our next video, which covered the market data for the last 2 weeks.